Second paper is on current account deficit, which goes into the economic aspects of FEMA. And third paper is allow rupee to appreciate. These three papers, I had my idea, but today I won't be able to cover. Those of you who are interested in going into the depth, you can please either go to my website and read all the three, or of course I will email the papers to the president and he can circulate. Section 1 of FEMA lays down the scope of FEMA. FEMA is a unique law which, in deliberate words, travels with you. You and I are Indian residents. If we go to London, for example, or any place outside India, we can't say that now I am outside India, so jurisdiction of FEMA does not apply to me. No, it does apply to you. Even if you are outside India, you cannot do something contrary to FEMA. Section 2 provides a lot of definitions. The chief definition is of residential status, foreign exchange, capital and convertible account transactions. And I take these three very quickly. Originally, under FERA, there was a different definition of residential status. Who is an Indian resident? Income Tax Act has a different definition, and if we talk very briefly, section 6(1), an individual is resident or non-resident simply by the number of days for which he stays in India or outside India. The intention of the person is not relevant at all. Physical count of number of days of his stay in India. That's all. So it is a clearly objective and a very simple criteria. Under FERA, there were several clauses, and your intention was very important. You came to India. Let us say there was a non-resident who came to India. Okay. And he just came for traveling. He wanted to go back in 3 months, but he met with an accident, he was hospitalized, and he was here for 9 months. Even if he stayed in India for 9 months, he would not become resident under FERA. Let us say, I am talking for the moment of FERA, your brother or your sister goes abroad for studies. So, intention is clear that after completion of his 3 years graduation course, he will come back to India. So under FERA, he was considered to be Indian resident. So much significance was given to the issue of intention, and the number of days criteria was given far less importance. Under FEMA, they have tried to make it comparable to income tax. In the process, they have confused the whole thing. And there is now a lot of difficulty in interpreting FEMA. And don't take my word for it. I have argued with Reserve Bank managers, and I went to the chief solicitor who presides over drafting of the law. And he gave one interpretation, and of course I argued with him for 45 minutes and said that your interpretation is wrong. And then I went to FED section, Chief General Manager, and his interpretation is entirely different on residential status. And I'll give you illustration. First of all, you understand that while defining residential status, they have only talked of individuals and companies. They have not talked of non-registered entities like partnership firms, HUF, trust. An individual who was in India in the preceding financial year for more than 182 days and is in India in the current year, he is deemed to be resident. Now this language they try to compare with Income Tax Act. Under Income Tax Act, you look at the previous year and you look at the assessment year. Now in FEMA, we must understand that the applicability depends for a different purpose. Let us say you are an Indian resident. In the month of June, you got a job abroad in USA. So on 1st June, you left India. You become non-resident. That is the idea under FERA. That is my interpretation under FEMA. But the way the FEMA definition under section 2B is, in the preceding financial year, were you in India? Yes, I was in India for 365 days. Then in the current year, are you Indian resident or non-resident? If you are still Indian resident, then when you have gone abroad, you can't deal in foreign exchange. You get your salary of $5,000, so you have received foreign exchange. You make expenses on account of your house rent, food and all that. You have spent foreign exchange. No Indian resident shall deal in foreign exchange. No Indian resident shall open a foreign bank account. These are the provisions of section 3. So are you violating the law? Take the converse case. There is a person who was always resident abroad. On the 1st June, 1st May or any day, he comes to India. He takes up employment. He got a job in India, so he took up employment in India. But in the preceding year,